this video, my chief financial analyst, Tallulah, and I are going to be showing you a full cheat sheet on exactly how we trade the S&P 500 options. And not only am I going to show you the main strategy I use to trade the S&P, but I'm also going to show you the exact trades I took in the last few days, how much money I made, where I entered exactly, where I exited, and all the stuff you need to know to properly trade S&P 500 options. Hopefully, you get some value out of this video. Now, today is Monday, the 3rd of June, and I ended up making around $1,500 trading today. It's not exactly my biggest day, but I followed my plan, which is the main thing. Remember, you're never going to make money on every single trade or make huge amounts of money on every trade. Sometimes you're going to get stopped out, and that's okay. The most important thing with trading is follow your plan, whether you are making money, whether you're losing money, or you're having an amazing day or not a very good day. Rules are the most important thing. Now, you can do what I do either on the SPY, SPY, or on SPX. SPX is basically 10 times bigger than SPY. So if you find yourself doing 10 or more contracts on SPY, you can save trading fees by switching to SPX, which is what I've done. So let's actually go into the charts and show you what I was looking at. Now, first of all, here we go. So here we've got my trade tracker, May, and let me show you Friday's trade first, the 31st. So I click here into May, and you can see we did, made $4,000 this month. It's all right. I was very lazy. I was on holiday for about 3 weeks of the month. But on Friday, we had a good day. We made $2,300 here, so we did a little bit more trading. So what are the trades we did? Well, the main trade that made us money was the SPX trade, so S&P 500 trade, here at $1,950 profit. And you can see down here what that trade is. But let me show it to you a little bit more visually. Here's the setup. But how did we get there? So let me walk you through that. For this trading S&P 500 cheat sheet, I trade options on the S&P. And for most of the trades, I'm looking for market positioning. That's how big institutions trade. Now, how do I know this? Well, I worked on the trading floor of a bank, and I have 3 retired market makers on my team. I'll pop them on the screen here for you. Elliot, BK, and Jerry, who together probably have about 100 years trading experience as market makers between them. So I've got some insight. Now, why do I care about that? Because you don't want to trade like the typical retail trader, because 90% of them lose money. Institutions, 90% of them make money. Which side would you rather be on? Well, I want you to think like an institution, like the big money, the smart money, not like the little retail money trader. So the first thing we do is we zoom out and we look at the market trend. So I go into options watch here. I'm on the S&P, and I just zoom out a little bit, and I've toggled this on in the background here. You might have seen that. And that's our trend indicator. It's an indicator that we custom built. I've literally worked on for 20 years, and we just encoded it into optionswatch.io, for which you can get a 30-day free trial. Again, links down below. I'm also giving you, by the way, a full cheat sheet, literally. Just go to felixfriends.org/cheat, felixfriends.org/cheat, and you can download it, and I'll walk you through the steps, and I give you the screenshots and everything else, so you have it black on white. But if we look here at the last couple of days, even though we're going up a little bit here, you can see that this 3 days, in the background, the color is actually quite reddish. So it's sort of saying, be careful, be cautious. Now, that's nice to know. But how do we really make money out of this? Well, okay, you can't predict the long-term movements of the market. Nobody can. But for a week or so, our trend indicator is pretty useful. See here where it turned green, and then the rally up. If you traded that would have been very successful. Right? But there is one aspect here that is much more important than even the trend, and that is key levels of support. Now, again, I made a whole video on how that part works, which I'll link to in the document, felixfriends.org/cheat, but I'm going to just run you through it here quickly. But again, if you want to get into a bit more the juice of that, download the document and really run through it. There is some data on here that most people are not aware of. These little bars here in green and in red, what do they mean? Well, the green ones are resistance on the way up. So I can see here that at 5,330 today, there is resistance, right? So if I want to put a line here, we could do that. We could say here at 5,330, there is resistance. And then on the downside, below the stock, where is the biggest red line? It's here at 5,240. That is our support. So we have a fairly good idea now of what happens. And what do I mean by that? Well, if the stock, we got a yellow pen here, the stock goes up, I'd expect it to bounce off here initially, right? It might try it a few more times, and if there's a lot of oomph, it might go through it, but eventually it should bounce off it. On the downside, if we go down to 4,240, we should find some support, and we should be doing something like that. How does that really work? It's got something to do with what market makers do. Market makers are on the other side of our trades. As I said, we've got 3 of them on the team, but watch that full video on that to go into that in a little bit more detail. It's in the document, felixfranz.org/cheat. Now, on Friday, the support and resistance lines were a little bit different. They were, and I wrote it down so that I could tell you about it, they were at 5,280. So I'm going to have to zoom in a little bit here so you can actually make that out. So on Friday, the resistance on the way up was here at 5,280, and the support was sitting at 5,200 down here. So I knew that was most likely the trading range. Now, Friday's candle was this one here that I'm pointing to, right? This candle here, which is a very, 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 very long candle. That was the candle. And look at the chart. Look at what we did. We did exactly that, right? We bounced off down here at 5,200, and we hit the head here at 5,280. So I went into Friday morning with that knowledge, which most people don't have. And then I looked on the stock chart, which was this here, and I could see this here is the beginning of, where does the day start? The day starts here. That was the beginning of the day. The S&P here is the top half. Let's just focus on that for the moment. And stock went up initially, bumped its head at about 5,260, and then started coming down. And I was like, I see the downtrend that I was expecting. And I entered my trade here in green and exited here about half an hour later. So the stock dropped. Now you could say, but Felix, you could have made all this money. It's true. But it took me half an hour and I went to sleep and I made $1,500. Right? Actually, it was more than that, wasn't it? I think it was a little more than on Friday. I'll show you in a moment. I'll pop it on the chart here. So that was pretty good. But how did I know what trade to select? So, okay, I had an idea of momentum. I knew that if it was going to go down, it was going to go down likely until 5,200, which is exactly what it did. This is 5,200, and then it went back up again. But I was asleep, so I didn't do the trade back up because I'm presently in Hong Kong, and therefore I'm often asleep when the market's awake. So if you live in the United States, this is actually far easier for you than it is for me, right? So what was the other part that I knew about this? And I've just need to rearrange these. What's the bottom half? It's the VIX. And the VIX is volatility. And if you are buying or selling options, you need to understand volatility because that's actually what we do. That's actually what we trade. I was expecting the stock would come down. And therefore, when the stock goes down, volatility increases. And here, volatility down here, I entered here and it went back up. So no, I didn't trade the VIX, but the VIX is the volatility of the S&P. So what trade do you select when you want to be bearish and you expect volatility to go up? Well, you want to trade where you are buying options, essentially. And the trade that I chose was a bear put spread because that benefits from rising volatility and falling stock price. And it's risk defined, it has a limited risk and it has a limited upside, but it allows me to position myself above the market here. So might say if I did this today, break even would be up here. Now, I would never do a one-day trade. I would always go out approximately 45 days. So there are a few layers to this onion as you're starting to understand. But let me run you through one more example of the trade I did today So it makes a lot more sense because now this is the last candle we're looking at here, right? This one. And we were faced here with, what was the setup? Here at 5,330 is our resistance. And the support, I'm just going to use these sliders to illustrate the support, was down here at 5,240. So if I draw some lines across, I'm allowed. Am I allowed? Yes. That was resistance. This here was support. And guess what? We went all the way through the support and we bounced back up. So we go back to the minute chart. We scroll back to where this was. Here it is. Let me also move the VIX over here again for you as well. There we go. So let's focus on the S&P. Now, we hit our head at 5,300. 5,300 was, actually, yes, we're right. That was the resistance line. Let me just delete that. 5,300. That here was the immediate resistance yesterday. And 5,240 was the support. Okay, how do I know that? It's that little knob there. You see that little green one there? It's a little bit more pronounced at the beginning of the day. So we went down below 5,300. So we hit our head and I was like, okay, we're now going to go down. We're going to go bearish. So I entered, a little bit late, but I entered here and I set up the same bearish trade again, a bearish put spread. And then the market went down really, really nicely and it hit my profit target. I was up at 10% or so on that particular trade. And again, volatility started down here and then rallied up to, significant levels. So it went up about 3 or 4 percentage points. So both things worked in my favor. I make money out of rising volatility. I make money out of the falling stock price. Both actually work hand in hand. Let me show you my trade here in Think or Swim, and I put a filter on it so you can see just my SPX trades. So what did we do last trade here? We paid $7,320 to open this trade. And then we closed the trade and we received $8,800. How much money did we make? About $1,500, right? In just, what was the time frame here? 45 minutes, something like that, right? So you can have big days just literally once a week or maybe every 2 weeks. And as long as you keep your losers small and you're having a decent set of winners like these ones here, you can actually be a consistently profitable trader. You don't need to stare at charts all day. I don't. I do like max half an hour a day. So if you focus on quality over quantity, you follow your trading plan, your written trading plan, and understand your risks and rewards. And if you want to get your hands on my written trading plan, download the cheat sheet. I also explain in there how you can get access to more behind the scenes thing, my entire trading plan, the whole thing, and all the good stuff. Then you can actually learn this. The only difference between you and me is skill. That's the only difference. And why do I have the skill? Because I was taught it by people who wanted me to make money for them, right? And then I surrounded myself since with people who went through the same training, as in banks taught them, hedge funds taught them. That's really the only difference. It's not rocket science. It just requires a little bit of effort to learn. It's simple as that. A little bit of knuckling down for a couple of hours a week for a couple of weeks, maybe even a couple of months, and practicing in a simulator. And then you can get to this beautiful place where your money makes money for you. I hope you enjoyed this video. If you want to get a copy of my free trading guide showing you the 3 proven steps to properly trade, then go on the first link in the description, felixfrancedock.com/cheat. And if you are new to the channel, then of course, subscribe and trade smart, trade safe, and I'll see you in the next one. My trades last week made $3,492, and I spent 1 hour on those trades in the entire week.